Recently, there has been a huge amount of content creators, like really a lot of people, creating videos regarding Alibaba, speaking about things ranging from its valuation all the way to how it is a Chinese company and how this entire setup in this entire stock market itself is extremely undervalued. So with that, I would really just like to take the time in this video to really explain all the different risks involved if you were to really buy into a particular Chinese stock, and in this case, definitely Alibaba. And I think ultimately there are two main bear arguments against the entire company itself, and namely, it's the delisting risk in the entire US exchange itself and the entire VIE structure, which is the variable interest entity. So before I start, I did create a Discord channel. So in this entire channel itself, there are people that are extremely bullish of Alibaba, and there are also people that are extremely bearish of Alibaba. So we are an open community. So you can put forth any different arguments and even dispute what other people think in the entire channel itself. If you are interested to join in this entire community itself, mainly focusing on explaining and understanding everything related to Alibaba, please click in the link in the description box down below. On top of that, I've also left my Tiger and Moomoo Brokers referral link. So for those of you who haven't created any account yet, feel free to use my referral link. If you deposit 2,000 or 2,700 Sing dollars in the respective account, you are actually entitled to 1 Apple share on each of the single trading platform itself. So what are you waiting for? It's 2 free Apple share, and now Apple is currently valued at like what? $149 USD. That's a free $300 USD into your wallet. So what are you waiting for? Please click in the link in the description box down below to find out more about the different details. Don't worry, a lot of my friends and families have already tried out the link itself, so they are giving out the free Apple share, and some of them already liquidated their position. With that, let's get right into today's main topic. So essentially speaking, there are currently two main bear arguments surrounding the entire Chinese stock market, and more importantly regarding Alibaba's share price itself. So firstly, it's about the delisting risk, and secondly, it's about the invalidation of the entire VIE structure. So let's talk about something that's more simpler and more easier to grasp, which is the entire delisting narrative that the US has been explaining and expounding on all the different Chinese stocks in the US exchange itself. So just to give you a little bit of context, this new law was introduced first in the Trump administration. So what Trump did was he introduced this new law stating that the Chinese companies are using their leverage position to suck out all the different investors' funds in the entire different exchanges that they are listed on, such as the New York Stock Exchange or the Nasdaq. And what all these Chinese companies essentially do is siphon all this money out of the US companies, yet at the same time not complying to the same standards that the US companies are subjected to. And in order for the US regulators to ensure that they comply to the different regulations and the different standard, they are now issuing a statement stating that, hey, in 3 years' time, which is in 2023, if not most of all the different Chinese companies still do not comply to the regulations by then, they then have the autonomy to delist all the different Chinese companies listed in any of the exchanges. And this has been a very worrying issue to some of the investors because there are many instances, such as Luckin Coffee, where they have been declaring fake profits, fake revenues, and essentially just trying to do different accounting hacks to just prove themselves to different investors and telling them that, hey, we are doing X amount of profit and we are growing at a 100% year-on-year growth rate. And because all the different US regulators and the US investors not having the ability to go deeper and to understand the different financial statements of all these different companies, they are then unable to make informed judgment about how the company is actually genuinely performing under the hoods. And with that in mind, you might then ask me, hey, what is the probability of Chinese companies delisting in the entire US exchange itself? And I will tell you currently, I would give it a 50-50 probability, and I'll explain my position why. So essentially speaking, there is a very important conundrum that I have to address right here. So you might ask me, if big companies like Tencent, Alibaba, JD.com, if they have nothing to hide, why not just comply to all the different US regulations? And I actually share the exact same thoughts on why not just share everything to the US. And here comes the problem. It's not that all these different individual companies do not wish to share these issues or do not wish to share their financial statement and financial health of the company. They're more than happy to do so. But right now, the main problem right here is actually this new law, which was passed by the Trump administration and actually garnered bipartisan support from both sides of the aisle, means both Republicans and Democrats actually do agree with this new law introduced. And what they really wanted to do was to give the US regulators a blanket authority to audit and to really look into any single Chinese companies. And what the CCP, or Chinese Communist Party in this case, really are concerned with is really this idea of authority. By giving the US regulators a blanket authority means that they do not have any ability to hide any form of state secrets, any forms of strategic partnership, or any forms of strategic movements all the different companies are currently doing in the entire worldwide arena. And this has been a very crucial point of contention between the US and China relationship, especially in this new law passed, because on one hand, we are saying that, hey, why not be more transparent? Why not be more upfront in all your different companies' financial statement? Yet on the other hand, they are extremely wary of how the US regulators might exploit their position. And you might say that, it's in the name of transparency. It's in the name of fair competition. And as we all know, being an ally of the US, regardless of whether you're an enemy or whether you're an ally, you know that whenever there are forms of exploitation, all these big companies usually bully their way through. And ultimately, China isn't a small country anymore. They are also of a certain standing, they are of a certain reputation, and they do not want to still be listening to the bidding of the US. And which is also why this important point of contention has been a very big issue for all the different Chinese companies out there. And if you were to really look at it from this point of view, what will really happen to all these different Chinese companies if they were really forced to delist in the entire US exchange itself by 2023. So right now, the US essentially gave Chinese companies 3 years to comply to all the different accounting standards, and on top of that, give them authority to audit and check any different past financial health or financial statements that they issued. And these 3 years might seem a very long time for us as investors, but to the negotiators and to those people or different stakeholders representing the different arms of the government, it's actually a very short time. They will have to go to the negotiation table, understanding what is their proposition and what they have to value and what do they think that it's of priority to the different governments itself. And like I always said in most of the comments that people are asking me about the delisting risk, this entire idea of this new law that was passed by the Trump administration and continued on by the Biden administration is because they see it as a strategic tool for negotiation between the two big powers. Right now, there has been little to no focus that's put on this entire problem itself because the US know that they still have time. And on the flip side, China cannot be continuously harping on this issue because it will make them seem desperate. So ultimately, it becomes a political game, it becomes a strategy game, and it becomes a game of chess. We have to see who breaks at the end of the day, but I would like to say that why did I put a probability of 50-50? Because ultimately, both of them can walk away from this table without a deal. Big companies like Alibaba, Tencent, JD.com can continue listing in the Hong Kong exchange, while at the same time the US exchange are also not desperate for access to all these different Chinese companies. So this is the main problem right here. How are they going to discuss further? How are they going to negotiate further? No one really knows in the entire world right now. It really depends on what happens in the closed doors of all the different chambers that they're explaining and pushing forth the different agendas. So I'll just leave the delisting risk argument right there. You be your own judge. Now, let's talk about how the variable interest entity is going to happen. So there is another camp of people or another school of thought that says that, hey, currently right now, a lot of all these big companies like Alibaba, for example, they are currently using a VIE structure. So before I explain further on what are my views and how probable it is, I'll first explain what does a VIE structure mean. So as you can see, for the last 2 decades, the VIE structure has been used extensively to facilitate offshore financing of Chinese business in technology, media, and telecommunications, and other regulated industries. So a VIE structure typically involves contractual agreement pursuant to which an offshore holding company, the offshore SPV, usually through a wholly foreign-owned enterprise established in China, controls and receives the economic benefit of the Chinese offshore operating entity, those whose shareholder would normally be PRC nationals. So if you don't understand the entire paragraph that I just read, just look at this diagram. So how did this entire idea of a VIE structure came about? So a lot of all these highly regulated industry, particularly in China, like in tech companies, media companies, telecommunications company, a lot of all these Chinese companies are deemed by the Chinese government to be of strategic importance. A lot of all these different companies form the fundamental bedrock of any country itself. And to the Chinese government, they think that they have a substantial impact in the entire economy and in the entire country itself, which is also why they want to be fully protected and fully regulated by the CCP. And in order for all these companies to continue growing, inevitably, they will start looking for more investments, looking for more liquidity. And in order to circumvent all these different regulations in place, they then came out with this idea of a VIE structure. Essentially speaking, what they do is they create a shell company in the name of all the different companies. So for example, Alibaba, which is the real company in China, create a shell company called Alibaba Group Holdings on Cayman Islands. And what all you investors out there are currently doing is just buying the shell company itself. So this shell company do not actually own any assets, do not have any cash flow, but they currently have a contract binding them together. So this contract is currently binding Alibaba, which is the real company, and the shell company that is in Cayman Islands. And this is the entire VIE structure, simplified. So if you want to have a more in-depth knowledge, I'll leave the link in the description box down below. So now, if you were to really look into this entire VIE structure and why they continue to have this very important risk that a lot of investors are currently unaware of, I'll just simply put and explain using this GCI Investors article, which I thought was very magnificently put. I'll also leave the link in the description box down below. So in this simple article, they identified two main risks. Firstly, they said the integrity of accounting, and secondly, they said the VIE structure. So essentially speaking, the integrity of accounting has been covered in the entire delisting argument and saying that, oh, all these different Chinese companies, for example, Luckin Coffee is making a lot of fake accounts, declaring a lot of fake revenues and stuff. So let's just put that aside because I've already addressed that concern. So just to have a quick recap, the reason is that under Chinese law, foreign ownership in certain Chinese industries is prohibited. As a result, it is illegal for Chinese companies like JD.com and Alibaba to have any non-Chinese shareholders. US investors and Wall Street firms looked longingly at the huge growth rates in China and wanted to access that, but the Chinese law prevented them both from doing so. So the VIE structure achieves the dual purpose of giving Chinese companies access to Western capital while simultaneously allowing Western investors access to the Chinese stock. The VIE says to the Chinese regulators that the company in question is wholly owned by Chinese nationals, while the VIE simultaneously tells the Western shareholders that they legitimately own that Chinese company. So just to put out a disclaimer, you don't legally own anything because the entire VIE structure itself dictates that the Chinese Communist Party can pull out of this entire agreement anytime, any day. You do not own any of the Alibaba stock right now trading in the entire exchange itself. It's more of a gentleman's creed. So people on both sides of the party do acknowledge this entire contract itself. That's when your Alibaba share or your Alibaba equity that you currently hold have a certain value. So what exactly are the problems with this entire structure itself? So firstly, they succinctly put, the entire VIE structure is illegal under Chinese law. So the reason is that any right of the VIE to profits of the Chinese company rests on the contracts it has with the real Chinese company. But as that contract was signed for the express purpose of allowing foreign investments, which is illegal, the contract itself is void and unenforceable. Yet, despite the very black and white illegality of the VIE structure, for the most part, the Chinese turn a blind eye to it. Hundreds of VIE exist and some have done so for a decade or more. So just to give you a little bit more information, currently the entire VIE structure that's listed on the different US exchanges amount to around more than $2 trillion. So that's essentially one Apple on itself. And the second argument that they have is shareholders don't have ownership to the real Chinese company's asset, so assets can be taken away without any warning or any compensation. And I have to acknowledge these two facts. First, it's illegal. Second, a lot of all these different assets that's declared on the balance sheet itself do not own or they are not rightfully owned by the shareholders. So just to address the different points. Firstly, about the illegality of this issue. So in Singapore, we're actually against same-sex marriage. And in our code of law, we have this particular section which is called Section 377A. And it depicts same-sex sexual activity between men is illegal, even if it's consensual and it takes place in private. However, this entire law and this entire section itself of 377A, it's not enforced. So you might ask, hey, what's the point of having a law that's not enforced? Which is also the same as the entire idea of a VIE structure. It's illegal, but the Chinese government haven't been openly parading the idea that, hey, we are gonna cancel this entire VIE structure in time to come. You might then ask both the CCP and the Singapore's government, what's the point of creating a law that you don't even enforce? Which comes to the critical point of this entire argument and this entire idea. The idea is there has been a huge movement behind the entire LGBT community, and there has been a huge amount of backlash about this entire section itself. So it essentially ties the government's hand in understanding and in trying to push forth this entire idea and this law. But with this law in place, they are then able to exercise the law as and when they want to. And with this entire fear climate, because of this legality of this law, it then discourages a lot of people to engage in this kind of sexual activities. And on the flip side, from the Chinese government's point of view, why did they not just legalize the entire idea? It is clearly stated in the law itself. They realized and they understood and they appreciated the importance of all these different key industries that they felt they had to be heavily regulated. And because it's heavily regulated, they know that all these companies require time, require money to grow. It requires capital, both domestic and foreign. By having the law, yet not enforcing it, just leaves the Chinese government with a backdoor. At the end of the day, if it really comes to the point where there's too much foreign influence in all the local companies, they can then pull the plug and say that, hey, I'm out, I'm not allowing any more foreign capital to flow into any of my critical states, because they believe and they realize that a lot of all these different influence from external parties or external stakeholders are shaping and actually transforming the entire agenda of the government, which is also why they leave it more as a backup plan rather than trying to enforce it. So that's the first idea of illegality. You might then ask me, what is the risk involved and how does it translate to the entire share price and the company itself? And I'll just say that in order for the Chinese government to invalidate the entire VIE structure and to wipe out $2 trillion worth of all the different equities that all the different investors over the entire world is holding, we really have to be in a very dire consequence, and you will probably have different priorities in life rather than looking at investments. And that is what I have been saying, and I will continue sticking to this entire idea, and the risk of invalidating the entire VIE structure is close to zero. On the second point of not owning any forms of asset or not actually owning the different shares of the company, I would say that it's a much more valid concern rather than saying that the CCP is going to go rogue and it's gonna invalidate all the different contracts. So this idea of companies individually going rogue, saying that they're pulling out all the different assets because ultimately you don't even own the underlying company, and proposing the idea that shareholders of all these different Chinese companies have a disproportionate risk that they have to take on as individual investors. I do acknowledge that point of view, and I would also like to say that this has kind of already been discounted by having the China discount. A lot of all these different Chinese companies, when compared to their US counterparts, despite having very strong cash flow, despite having very strong amount of assets, despite having top line huge amount of growth and top line revenues increasing year on year exponentially, a lot of all these are still trading at a very low multiple. And this risk has kind of been accounted for by all the different analysts and all the different Wall Street funds out there. Should be more concerned about how the management team is intending to bring the company forward. So you will really have to look into the entire idea and the psyche of the company itself. And in short, if you own shares of all these different shell company, you have to understand and go back to the fundamentals that, hey, you are owning a shell company. You are not owning the real shares of the actual company itself. So you have to understand the different risks before walking into an investment. So I hope this entire video do sum up all the different risks surrounding all the Chinese companies itself. I've been receiving tons and tons of all these similar questions about, oh, what are the delisting risks? What if the Chinese government invalidate the entire VIE structure? I hope everything is summarized properly in this entire video itself. In future, if anyone poses any sort of similar questions, I'll then direct them back to this entire video itself. So if you do not agree with my idea, do not agree with the probability, and you do not agree with my entire thesis itself, please feel free to leave in the comment section down below. I would love to know how you think about it. With that, I hope I didn't scare a lot of Alibaba shareholders away. I would really just like to regroup and refocus into the fundamental issue that a lot of people have been spreading fear, uncertainty, and doubt regarding the entire Chinese stock market itself. So I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye.